Most people only have $65,000 in their pocket when they retire. And with that money, you can only spend about $300 per month. Could you live on $300 a month when you retire? Have you ever thought about whether you're better or worse off with money compared to other people? Maybe at night in bed, you think about your bank account. Did people my age save more than me, you wonder? Or while scrolling social media, you see someone's new vacation photos, their brand new car, and ask, how do they buy all that? Sometimes we even wonder if they're doing something illegal. Today, I'll show you the financial reality of the average person. Some numbers will surprise you. Some will make you feel good. Some will open your eyes. Either way, by the end of this piece, you'll clearly see where you stand financially. Have you ever thought what normal actually is? We estimate things based on what we see around us, but the reality is usually a little different than what we imagine. And that's where it gets interesting. Knowing these numbers isn't just to satisfy your curiosity, it's so you can make better decisions with your money. Think about it this way. If you want to get in shape, you'd like to know how much the average person exercises. If you want to raise your grades, you compare yourself to other students. Money is the same. When you know where you stand, you can make more informed choices about spending, saving, and investing. Our first topic, income. How much do we earn? About $1,000 a week. That's roughly $52,000 a year before taxes. That means $26 an hour. If you're around that, you're right in the middle. But here's where it gets interesting. That number is before taxes. After the government takes its share, the money you actually get is around $35,000 to $40,000 a year. Suddenly, it doesn't look that big, does it? But what really matters is what you do with that money. Second topic is retirement savings. The average amount Americans have saved for retirement is $65,000. Don't cheer or cry just yet. This is the average amount for people who have saved. 1 in 4 hasn't even opened a retirement account. $0. So what's their plan? They're just going to rely on government benefits? Is the government benefit enough? Usually not. Average Social Security payment is $1,550 per month, $18,600 a year. Yes, you read that right. $1,550 a month. Now think, could you live on $1,550 a month? If your mortgage is paid off, maybe you could get by. But medical expenses, groceries, bills, and you know medical costs can sometimes be extreme, especially if you're in America. Good luck to us all. Third topic, spending. Where does our money go? Do you know how much an average household spends per month? $5,577 per month, $67,000 a year. Of course, I'm talking about America. Please adapt this to your country in your own calculations. Think in percentages to calculate better. So, if the average family spends $67,000 a year, they need to earn at least that just to break even. If you want to save, you need to earn a lot more. So where does that money go? Housing, $1,885 per month. Rent, mortgage, taxes, utilities. Food, $691 per month. Groceries and eating out. Transportation, $913 per month. Car payments, gas, insurance. Just these already add up to about $3,400 a month without buying anything else. Are we supposed to eat rocks? Next topic is credit score. Good news, a little. Average credit score is 715. That's not bad. On a scale from 300 to 850, 715 is considered good. But that doesn't mean everyone knows what they're doing. There are still people floating around in the 500s to 600s, then they cry, why can't I get credit? Good news, keeping a high credit score isn't rocket science. Pay your bills on time, don't max out your credit cards, don't keep opening new cards for 10% off everywhere. The bank wants a little loyalty and a bit of consistency from you. That's it, but still many people can't do it. And now, credit card debt. Ready? The average household carries $9,000 in credit card debt. $9,000. Not mortgage, not car loan, probably for things sitting in your closet or thrown away. And the bitter part, credit card interest is 15 to 20%, sometimes even 25%. So if you have $9,000 in debt, you're paying about $1,800 a year just in interest. A bit much. That money could have been growing your wealth. But no, we have to enrich the credit card companies. Really think, was most of that debt spent on necessary things? No, mostly on unnecessary clothes, electronics, eating out, impulse purchases, things that felt good at the moment. The solution is simple but hard. Your first job is to pay your credit card off in full every month. Don't put something on a card unless you'll pay it with cash. If you have debt, make paying it off your number one goal. Earning 10% in the stock market is great, but paying 20% interest on a credit card is terrifying. Net worth. This is the real wealth indicator. So how do we measure this? You subtract your debts from everything you own to get your net worth. If you're 25 and have $14,000 in net worth, that's not bad. But if you're 34 and still at $14,000, you should stop and think. But don't stress too much. If you're 35 and you're just starting to improve with these kinds of videos, you can still catch up. Don't worry, whether you're 25 or 35. If you've made it this far into the video, you're ready to do something for yourself. I know you can get out of it by changing some small habits. I trust you. And now, savings rate. The average American saves only 6% of their income. 6%. That's it. Think if you save 6% of your income and some of that goes to short-term goals, car, house down payment, what's left for retirement? Most experts say save at least 10 to 15% of your income for retirement, and this should be separate from other goals. Now ask yourself, how much are you saving? Next one, retirement age. Average retirement age is 61. Sounds nice, right? But there's a problem. To get full government benefits, you need to be 67. So if you retire at 61, how will you get by for those 6 years? And if your savings are average, those 6 years will be a bit rough. Also think, if you started working at 22 and retire at 61, you worked 39 years. You put up with bosses, sat through meetings, and in the end, you get $88,000 in your retirement account, $300 a month. Plus, if you retire at 61, you might still have 25 years ahead of you. So hopefully there's more than that. 25 years is a long time. And how many of those years will you be healthy? Maybe you're fit at 61, but at 71, at 81? Good news, getting above average isn't hard. Do you know why I showed you all these numbers? Because the average person's money management doesn't work. But once you see the average, it becomes very clear how to do better. And doing better doesn't require a magic formula. If you save more than 6% of your income, you're ahead of most people. If you avoid credit card debt, you're far ahead. If you've listened this far, I'm very happy for you. Please, before you leave this video, say hi in the comments. I want to meet you. I can even reply to comments with voice. I've been wanting to try this feature for a while. Can we try it together?